Thanks, Deepak. Thanks for the lovely talk. Even though you gave out a disclaimer saying this is a strategy with the least probability of people making money. That was a throw line. Okay. Okay. I think we've had a long day ahead of. Thank you. We've had a long day ahead, behind us. We have spent a few hours together sitting and listening to strategies. Thank you for your patience, and I thank all the speakers. And while on that note, I would like to call Vish over here, please. Vishwanathan Sundareshan. Please, can you come over? To leave tomorrow morning back to Chennai, from Chennai basically. To thank him for spending time with us today, sharing his strategy, and prior to that, creating that strategy and then wanting to spread it across. A few months back, he'd asked me to distribute it, okay, without bias. So I put it in Google Docs, and like I told you earlier, I'd created permissions and like that, and subsequently removed those permissions and made it open. So now quite a few numbers are using this 3-4 strategy. Shiva has tweaked. Else a third person is updating it on a daily basis. So this strategy is sort of, it evolved slightly from where it started in the year 2005. And some else in this room today, two gentlemen, Ram and Joseph, are working upon automatic spreadsheet so that you don't need to manually update values for 40 different counters, 40 different scripts. Includes probably 2 indexes, and 38 stocks, 38 high beta stocks. So you can basically take your pick and trade or enter any of those stocks. You can do extremely long, or you can do futures where you can go both long and short. Anyway, that's basically to thank Vish for creating this strategy and sharing it with us, spending time with us, encouraging that it be tweaked so that it can increase its performance and help people further. Thanks, Vish, and hope Vish accepts a gift from us as a token of appreciation for having spent time with us. Thank you. Vish is leaving tomorrow morning to Chennai because he has to get back on some urgent personal work. Thanks. Thank you, Vish. Have a nice journey back to Chennai. Okay. How tired are you people? Are you time for one more probability quiz? It's a very interesting quiz. Anybody wants to listen to it? Or we can do that tomorrow. Okay. Now I think what we can do is I heard somewhere that attention spans for children, attention spans, very small children, it's about 7 seconds apparently. My wife runs a daycare center, so I can probably correlate to that. I can understand the attention span where you have to grab attention within 7 seconds. And for adults, they say it's 4 minutes, and you've been sitting the whole day. Probably it will take a little time for you to internalize all that information you've got, come back with questions, you've made notes of it. So probably, sorry? You had a question? Okay. Internalize it and then see how you can use it to your advantage. One more request from our sponsor. We'd like it if everybody could wear those t-shirts tomorrow. Be a nice photo opportunity. You can have nice pictures and post it onto Twitter. Those of you who are not on Twitter could probably go to Twitter, sign up, and by tomorrow we would have created a closed user group. It's called a CUG. It's said that in a telecom context. We have Mr. Shantamu here, who is the accounts manager at BSNL. So I'm sure that my trading will suffer for want of a bad internet connection. And it would be nice if all of us would wear our t-shirts. We're starting tomorrow by around 8:45 with the timings are a little changed for tomorrow. 8:45? 8:45. Anybody, several people raised their hands in the morning when we talked about a jog. Anybody still open for it? Number of hands are lesser. No. Sorry? I am there. Yes, I am an early riser. Oh yeah. So it's good actually. It's been nice listening to the speakers. I of course have been lucky to listen to them a little more frequently by virtue of some of them being in Bangalore. I've gone to Chennai and met Vish and Sriram. Sriram is going to be talking about trader psychology. He has about 20 years of experience in markets, and I don't think we have someone who is qualified to talk about trader psychology. And okay, this is just my opinion. That's what I feel, and it's going to be some kind of learning for me also, because that's one area I lack. We really talk about 4 points when it comes to trading. One, back-tested strategy. 2 is money and risk management. 3 is being well capitalized, and 4, and most underrated and the most important thing in my opinion is trader psychology plus discipline. So Sriram is going to be talking about discipline tomorrow, and the importance of that can never be understressed, mainly because we apportion the least kind of importance to discipline and put up strategy, stop loss, and various other aspects which are important but probably not to the same degree. So I think we can no, they are not up for it, so we'll do this particular quiz. It's a nice, interesting quiz. We'll do it tomorrow, probably 6 o'clock in the morning. Yeah. After dinner, there's one session planned after between 9 and 10. Huh. Okay, let me ask one more time. How many people are open for the 9 to 10 session? Okay, this is going to be an interesting talk by Vishal Malkan. Okay, he incidentally has been a trader since the age of 16. So probably could give in a slightly different area Sachin Tendulkar and inferiority complex. Okay, so should we have that session now? We are open for it? Yeah? Okay. So can we assemble here by around 9 o'clock? Vishal, 9 is fine. Would you be using charts? Yeah? Okay, fine. We'll have that by around 9, so we can go have a nice dinner, recharge our batteries, so to say. I know it's a cliche, but
all of you today, because like all of you, you have never seen him, and for the first time he is trying to do something good for all of you, and no one have seen him, and you will trust him, and you have come here. Definitely.
And transferred money too.
Yeah, that is the trust I'm talking about. And I am telling you from my heart that this is the best birthday he has ever had in his life. Thank you all of you. Thanks a lot.
So let's hear him speak, and he's making his debut here today. Tomorrow he'll have a session on intraday trading strategy using candlesticks. Vishal, thank you.
Okay. Hi, this is Vishal Malkan. I've been a trader, as he said, since the age of 16 and was fascinated by markets since a age. And maybe I can say I've done all the blunders a trader can do. I'm into training since last 5 years. Been a faculty at National Stock Exchange, Bombay Stock Exchange. I've conducted training programs at various corporate houses like ICICI Bank, DSP Merrill Lynch, Morgan Stanley, Bank of America, and various management institutes including IIMs and Goa Institute of Management. And I run my own small institute at my office and train people on how to trade, on technical analysis. By qualification, I have done MBA Finance and finished my CMT. CMT is Chartered Market Technician, the only degree in technical analysis recognized by all stock markets of the world. Okay, and today we'll be talking about RSI, some new insights. I'm sure everybody who's using technical analysis or learned technical analysis will be aware about what is RSI. How many people use RSI or know about RSI? Quite a few. So what we are going to do is we are look at a different unconventional way of looking at RSI. Some of you might be knowing it. I am sure there are so many experts here, including the other speakers. So this is for the audience who want to learn, and for audience it might be some elementary thing. But let's see if we can get some new insights. So as I said, RSI is one of the most common and popular tool in technical analysis. It's relative strength index. It was founded by Wells Wilder. Okay, and the most common thing we know is it compares closing price to RSI, or it uses only closing price. It plots 0 to 100, so it's a banded oscillator. Okay, default setting 14 period suggested by Wilder, and generally we use 70-30 overbought, oversold, or 80-20. Anybody uses anything different than this? Anybody using other than 70-30 or 80-20 overbought, oversold RSI? 50. Yeah. Huh? Okay. Yeah, okay. So exactly what we are going to look at it. Okay. So let's see, the conventional use of RSI is like this: 70-30 overbought, oversold. 70 is overbought, 30 is oversold. And again another chart which is says 70-30 overbought, oversold. When we look at divergences, everybody is aware about divergence: positive divergence, negative divergence, right? Now, this is how a divergence is there. So it's basic elementary thing. Anybody not clear about divergence? Right, so it's okay. So let's look at it from a basic level, that RSI is basically a momentum indicator. Momentum is speed, speed is distance upon time, right? So when you are covering some distance, you are also having some speed. So when market wants, suppose you are going on a highway at the speed of 120 and you want to take a U-turn. So first you slow down your speed and then take a U-turn. So what happens whenever there is a U-turn in market, when markets are going up and it wants to take a U-turn, so first it will slower the speed. Alright, the market is moving up only, but the speed goes lower, and that is what we call it as divergence. Okay, we can see that market makes a new high at point B, whereas speed makes a lower high. That means at point B, the momentum was less, which is known as simple negative divergence. So that signals that the market is about to turn. It is not a confirmation. Remember, anything which we use other than price volume is all derived. Like RSI is derived thing by human beings. So everything which is derived needs price confirmation. So I get alerted by RSI, but I don't act on the divergence. I get alerted. So that's negative divergence in an uptrend, and that's positive divergence in a downtrend similarly. So clear on divergence. So this is the most common concept used by conventional users of RSI. Okay. Now in this, let's see, this is known as divergence. You see the highest RSI is here somewhere in October, and you see the highest price in January 2008. So since October till January, we had a series of divergence. Every time market makes a new high, RSI makes a lower high. That means it is ready for a U-turn. So the crash which happened in January 2008 was there since last 3 months on the cards. Right? The speed was already going down since 3 months. Okay? So it was getting ready for a U-turn. And similarly, we have positive divergences, like markets making new low, but the speed is going higher. That's a normal positive divergence. Okay, this is the conventional use. Now, how do you trade these divergences? Or we look, these are the divergences. Now we look. All right. Now we look at unconventional use of RSI. So everybody using 70-30, 80-20. Now we define the market into two types. We have four different things, whatever we can cover in a span of 1 hour. Let's see how much we can do it. First is called range shift behavior, and there is something called as reverse divergence, or we can, some people call it hidden divergences. Okay, and there are trend lines on RSI, like you draw trend lines on price, you can even draw trend lines on RSI, and then you have support resistance on RSI also. So let's see the first part. Now there is a book called Technical Analysis by Constance Brown. I forgot the name of the book. The author is Constance Brown. There is a new concept on RSI which says that overbought and oversold are redefined in different markets. So it's a bull market, oversold will be 40. And if it's a bear market, oversold will be 60 or 65. Sorry? Yeah, overbought. So in a bear market, overbought will be 60 or 65. So we can, instead of looking at 80-20 and 30-70, now change the lines and see how it works in different markets. If it's an uptrend, RSI will follow the range of 40 and 80. If it's a downtrend, it will follow a range of 60 and 80. Strong uptrend, it will follow a range of 60 and 80. If it's a downtrend, it will follow a range of 65-20. And if it's a strong downtrend, it will follow 40-20. So what is common between both the trends is 40 and 60. That means market is sideways. Okay, so now my two lines will be not 70-30, not 80-20, but 40-60. And 40-60 will define whether the market is bullish or bearish or sideways. Now you see this is where the market is in an uptrend, and these lines are 40-60 on this chart. So in a bull market, it does not break 40. That 40 is oversold. And in a bear market, it will not go above 60-65. So that's overbought in a bear market. And to make it much more clearer, we'll have more charts to see how it changes from one range to another. Now, how do you know that market is shifting from a bull market to a bear market, or at least sideways market? Is by doing a range shift. Now, how do a range shift happen is, this is 40-60. Okay, market's trading in a bear market, so it will trend to go lower than 40, around 20-30 levels. Then market bounce back, and then next time it takes support on 40. Okay, so this is the point where it is now not ready to go below 40, which is the lower part of bull market, right? So that is the first indication that the trends are changing. Clear? Anybody, any doubt? When you are into a downtrend, RSI tend to go below 30, below 20, right? Then there will be a bounce, and on the next decline, it will not go below 40. That is a range shift. The shifted to bullish zone, or at least we can say sideways, or we can at least say it is not going down. When it takes support on 40, it says I am not going down. Okay? Let's see how it happens on the chart. See here. That's a bear market. Okay? RSI going below 30. And then on next rally and then decline, this A point which is marked is acting as a support which is 40. Clear? That's A point which is almost same to the lows which has made earlier. but RSI is taking support on 40, that means it says I am not going down. Okay? So from there, I can at least expect a sideways market and a rally to 60 in RSI. And if it manages to cross 60, then we are into a bull market, or the trend is up. Okay? So it does not go above 60, 65. So the trend does not get disturbed. It goes sideways for some time and then again breaks 40. And on B point, it takes support on 40 and says, again I am not going down. And from there I see a sideways. See how it works in a sideways market. It will not cross 40. It will not cross 60. So that defines a sideways market. Right? So this is how a bullish range shift happens. One leg below 40, second leg at 40 support. And similarly, there will be a bearish range shift like this. You are into a downtrend, you are first in an uptrend, and at point A, it says I am not going above 60. Now 60 is the higher part of the bearish market, right? So it says at least I am not bullish, and then turns down. Again it turns up and says at point B, I am not going above 60, so at least I can expect 40. So that defines sideways market. So this is how a range shift from bullish market to bearish market happens. So on the second bottom, which can be a lower bottom or a higher bottom also, but once RSI takes support on 40, trend has changed. And trend change generally does not mean only up and down trend. Trend changes from up to sideways or down to sideways also. Okay? Now let's see how it works on all time frames. Now this is a weekly chart of BALE, or I don't know the name, but I think it's BALE. It was pre the split. You see this 2005 till 2010, and this red lines are 40 and 60. The green or the blue line is 80, and the below line is 30. So when markets are extremely bullish, it will not even break 60. So that's extreme strong bull market. Taking support on 60 means that is the highest part of a bear market, which it does not break. That means extremely bullish. Right? Then there is a crash which happens around 3, and then 4 again takes 4 and 5. Is 4 taking support on 60, so extremely strong market. Look at the point 6. Point 6, it resists at 60, says I am no more bullish. I am no more bullish after point 6. Right? And then market turns into a sideways market or a downtrend. Then again point 8, which is very close to the low, it says I am no more bearish, taking support on 40. Anybody not with me? Yeah. Yeah, this one also. Yeah, that was also, that I missed. So that is also a sign that it's not going up. So it's a part of sideways market. If not going above 60, not going below 40 is sideways market. So this is a weekly chart. Okay. Now let's look at a monthly chart of some stock, and it's 1995 to 2009-10. We are taking support at 195, says not bearish. Right? Taking support on 40. Taking support at 2, says extremely bullish. Taking support at 60. And see the move from 2 to 3. Then at 3, says not going up. Right? At 3 it says not going up. Taking resistance at 60. And from 3, 4, 5, 6, 7, it's into a sideways market, 40, 60. Then again breaks 7, which is strong uptrend above 60. Then it goes up to 85, 90 levels. Now what do we do when, by conventional use, when your RSI goes into 70 or 80, what do you do? Overbought, a loose term used in the market. Okay, What do you mean by really by an overbought? Tend to short, or at least you will not take part in the rally. Right? Once it gets into 70 plus or 80 plus. But now if you use this concept, then you are looking at 60 supports to enter and then ride all the way to 80, 90, whatever it does. Or suppose I am a trend follower, if it crosses 60 after a span of 5 years, that means a major trend is going to happen. So I will not exit till the time it again breaks 60. And what would I have done is, you would have bought at 7, would have rode all the way to 10. At 10 also it does not mean it's bearish, right? To really get bearish you have to go below 40. But if it is maintaining above 60 for 5 years from 3 to 10 and the stock price has gone 10 times on a monthly chart, and this same principle you will find it effective on a 5-minute chart or a 15-minute chart, 1-hour chart, daily, weekly and monthly. It defines the way you look at the market, whether it's a bull market, bear market or sideways. Rather than looking at overbought, oversold, which most of the time will keep you out of the market for a strong trended market. Like if you see silver in 2010, when it went from this 40,000 to 75,000, its daily, weekly and monthly RSI were touching 90. You will not dare to touch it if you are using that concept. But if I am using this concept, then I clearly define it's a bull market. So every dip to 60 is a buy. Now I am not getting a dip to 60 in daily, then I look for a dip to 60 in hourly to enter silver at whatever price, whether it's 50,000 or 60,000. Right? So the overbought, oversold concept is almost like an outdated, or it is not learned properly. Market can remain overbought for an extended period of time and you might miss the biggest rally of the market. Or market can remain oversold for a long period of time and you might still be holding your stock or not able to short. Right? Something which is objective, it defines. Overbought, oversold does not define. This defines whether the market is up, down or sideways. And accordingly I will take position. Any doubts? Questions? 14 RSI, all time frames. Daily, weekly, monthly, 15 minute, 5 minute and 40-60 is the lines which are there. No more 70-30, no more 80-20. We'll see that. So first the concept is clear, right? Now let's see. Yes. Yes, I do take. When you can trade with one indicator, no need for two. Sorry?
Excuse me, sir. If RSI, if it is in overbought or in oversold, means how long it will stay over in overbought or in oversold?
Why you want to know that?
Means,
what is the reason behind that?
Means because I'll buy in the
Sorry.
So,
When it is overbought, as per your term,
means
it is 70 plus.
I want to exit my position.
So it will tell you now once it goes below 60 or it does a range shift like this. It goes up and shows like this sign. It says that I am not. But as long as it is going up and making money for you, why you want to find out the time period? When your one trade is making enough money, then why you want to look for another trade? Any doubts? Anything which has open, high, low, close, which can be put on chart, silver, gold, Nifty, Bank Nifty, and international currencies also. That's part of life. When you put supports and resistance, say if 5,000 is your support, and if it goes to 4995 and bounce back, you say support broken. You say support broken 4995 by 5 points and does not close below that. So it's not broken. The same rule will be say if it goes to 61 and comes back, it is as good as 60, right? Yeah, first the 40-60 concept of range shift clear. How market shifts from one trend to another trend, right? Let's look at current market. This is Nifty daily chart. What it has done in last few days. Taking resistance at 60, it says I am not going up. Clear? On this chart, okay? If you are looking at daily, daily says I am not going up. It does not mean I am going down. Okay? Not going up does not mean not going down. Remember, how many types of markets are there or how many trends are there? I'll say 4. Okay? I trade it that way. It helps me in trading options. So there are options. Let's diverge a bit, 5 minutes for options. There is option buy, call sell, and put buy, put sell. Okay? Call buy bullish, put buy bearish. Call sell, okay, and put sell. Okay, now let's define it better. Call buy bullish, call sell not bullish. If you are bearish, you will buy a put, or if you are bullish, you will buy a call. What would I do here is I am not bullish, but I am not bearish. So sell a call. Right? I am selling a call because it says not bullish. So you have to define in this manner. Not bullish does not by default get bearish. Okay? So that's how I trade this. Now look at this downtrend going down at below 40 levels, and then it goes up and takes support here. Okay, you are not convinced that because it is not 40 but 37. So we'll skip that. It goes up and now takes support at 40. And again takes support at 40. So this was a sideways market to a bullish market, and then it shifted to bullish extremely. Overbought kind of thing in your terms. But now what it is doing again? A range shift to bearish. It says I am not going up. It does not mean that it will not go up. Okay? It does not mean that tomorrow it will not go up. It's 77.89. Okay? Any doubts on this? Now I have to define a broader market or a holistic view of the market. Then this is my daily chart. So by default setting we can say that daily is a short term trend, weekly is a medium term trend, and monthly is long term trend. Okay? It might be different for different players here, but on a general basis we see that if daily is doing this, then let's check the medium term trend, which is weekly, what the RSI is doing. Now in weekly it is above 60 and trying to take support above 60, which is bullish. Now what to do? Hey, forget about calls, but what to do about Nifty? It's taking support on 60 or trading above 60. So my daily says not bullish. Weekly says strongly bullish. Above 60 strongly bullish. Now what to do? What will work? Thumb rule of technical analysis. Higher time frame works. Go with the higher time frame. Okay. So weekly says strong market. Then look at monthly. Why it is doing the way it is behaving in last 1 month? October. Because it has approached 60 on a monthly basis. And that is also for the first time since a long period of time. In my experience, it will not cross 60 in one shot. It has to give respect to that 60 for some time at least. And in terms of, if I mean some time and it's a monthly chart, then it means at least 2, 3, 4 months. Maybe give one dip and then cross. You get that? So monthly is in sync, saying not bullish or not getting into bullish zone. And daily is also saying that only weekly is an up. So there is kind of contradicting thing. But if what it dip now, I'll look at my time frame. Right? If I want to trade this, then I'll go into lower time frames to find out. Now, break of 60 on weekly will confirm that now it is not going up. For that you need some crack, which can happen next week or maybe after 1 week, 1 more week. And if it breaks up, that means it breaks 60 on a daily, weekly is already above 60, and monthly will turn above 60. That can be an extremely strong rally. Yeah. But that was also, you can see this was taking kind of a support. And 60 broke. Straight went above 60. That's strong up move. And then since then, if you see 3 to 7, it didn't, once only here went below 60 and didn't go above below 60 for the whole 4 years. So every dip it comes and gives a pullback is a buy. And then how subtle the signal was when it turns from here and this was the killer. It says no more bullish. So what I can expect minimum is 40. On a monthly basis, 40 means how much? And it goes to 40, slightly below 40. Then it goes to 60. See how this respected. That is what I expect here also. This respect at 60 for 3 or at least 6, 7 months. And then it goes up. And then again, no more bullish. Right? And since then, 60, 40 and now 60. So if you look at a long-term chart, we are still in a sideways market. The levels of sideways market has changed to higher levels. Though it looks like we are near 6,000 and we are looking at a new high. But from this perspective, we are already the base has gone higher and it's a sideways market. So it will work on each and every time frame, on all stocks, all commodities, all time frames. So if these signals are contradicting, that means we are expecting a sideways market, some more, and if next week cracks, then all will resist from 60, which says at least not bullish. Then I know what to do is sell calls, and maybe I can look intraday chart where I can see for break of 40, which is hourly, to go short. I need to connect to. There's some more stuff left if we get stuck on this only. Clear on this? Why Nifty and Bank Nifty are struggling to cross or struggling since so many days? Because though weekly is bullish, but on a monthly basis we are resisting 60, and monthly, as I said, higher time frame rules. Clear? It will be the same thing. Bank Nifty 60. Struggling to cross 60. Though weekly again same picture. 1 second. I'll show you in a minute because it's been logged in from my place. My wife must be trading. See, Bank Nifty is also at 60, and when it came down in the year 2011, it took support at 40. So the trend didn't get bearish, and the signal was here when it took resistance at 60 on a monthly chart, and this was on monthly. And then let's look at weekly chart. See how it does. Strong uptrend. Everybody with me? Is there that pointer? It's not there. Okay. So this was the uptrend. Then it says not bullish. I'm not going up. When it resists at 60, says not bullish. Then it takes support on 40. 60, 40, 60, 40, sideways market. Breaks 40, bearish market. When it takes resistance on 40, extremely bearish or strong bearish, right? Then it goes straight to 60, and on the next decline, it does not go below 40, says no more bearish. Then again goes to 60, so that's sideways, and then above 60, bullish. Yes, divergence were there. This was divergence, market down, and these are divergences. Yes. We'll look at divergence separately, not mix it. Let's focus on range shift. Once you focus on this, you don't need divergence. Okay. Cross of 40 is not a strong buy because it crossed 40 here also. Doing this is important. Crossing 40 is not important. Taking support on 40 is important. And many a times it might not be like picture perfect that it goes above 40, takes support 40 and then goes up. It went straight to 60 first, and next decline it took 40, and that this is an ideal range shift. Ideal range shift, which means that now markets are no more bearish. Here, this is the time you should take aggressive position and look for a 60 at least, right? Any damn stock, any stock? State Bank. That's weekly chart. Now, if you follow the way what we are looking at RSI, it will completely change the way you look at charts from tomorrow onwards. You shift your lines from 70-30 to 40-60, and it will clearly define bearish, bullish, sideways. Only any time frame. On support of 40, when will a range shift happen? When your first leg is below 40 and second leg takes support on 40 is a position to take. Okay, in this case, if I want to take position, it straight away goes to 60 and this time it takes support 40, so I have to take position here. Now you see I missed this rally. Okay, how do I take care of that? Lower time frame. If it has not taken 40 support on a weekly chart, it is not the end of world. You go to a lower time frame daily, there it would have taken a 40 support, or there crossing 60 is a buy, right? Suppose let's see this period which is January, February 2012. So let's convert this into daily, and then I look at this. This is January. Now you get your trade. First, the trend will change on a lower time frame, right? So I get my entry from a daily chart. 40 support, right at the bottom. Any doubts? Yes. If there is a straight moving daily, see, remember one thing, if you are trading discretionary and not like system which is rule based, you can't trade with one chart. All your questions, all your answers to all your questions will not be there on one chart. You'll have to go from higher to lower chart and higher time frame rules. Right? So probability of market breaking up is lower because monthly is at 60, though weekly is above 60. Probability, I don't say 100%. If it goes up, all three trends are up, then we can have a spectacular rally possible. Right? What happens in trading this fashion compared to overbought, oversold is, where as soon as you get into overbought, you think about the other trend, which is actually going against the trend. Again, the thumb rule of technical analysis that go with the trend. So I will not short anything which is above 60, whichever time frame I am using. Nothing to short if anything is above 60, and nothing to buy if it is anything below 40. Problem happens when we try to catch the bottom by buying near oversold and selling near overbought. The basic rules of technical analysis, if you follow, which is 2-3 things that don't buck the trend, go with the trend. If you follow this much also, is enough. If something is above 60, I should not be looking at shorting at all. Now, how do I improvise on this? Okay, ideal trade setup. Yeah, candle close by the end of the day. Okay, this one. It's okay if it closes slightly above or below 1 or 2 points. If you are looking at that perfection, it's not going to come in any pattern or any chart. You'll have whipsaws, you'll have whip arounds in every system, whether it's a trend following or a discretionary. Okay. Now let's see how do I optimize this. Okay. Best trade setup. You should always go with higher time frame. So say your higher time frame is weekly. Okay, and your lower time frame of course is daily. Anytime you trade with 2 time frames, there should be at least 4 to 6 times difference between the 2 time frames. So daily and weekly will be 5 times, weekly and monthly will be 4 times. Okay, and if you still go lower, then daily and hourly will be 6 times in case of equity. But if you are doing commodity, then daily and hourly is not the right time frame. Then daily and 4 hour has the right time. Because if you use commodity, it will be hourly and daily, which will be 16 hours, 16 times. Okay. So let's see how it works in daily. Ideal buy setup, which I call it, say maybe a 5-star signal, is when your weekly is above 60. Okay. And daily comes and takes support at 40. Okay. So what we are doing is, the higher time frame is extremely bullish, above 60, and lower time frame comes to the lowest possible area of an uptrend. Because if that breaks 40, then the trend changes. Clear? That's an ideal setup. And the same will go for shorting. This was for buy and this is for long. Now what would be an ideal setup where weekly is below 40 and then daily comes at 60. Thanks. Okay. So let's see where we could have got this kind of setup. What I do is, this is Reliance Infra chart, weekly, okay. You look at RSI which was below 40 for one full year. Below 40 means extremely bearish, high time frame, right. So I mark my lines there. On the period where it is below 40. Say up to here. So this is a period where RSI is below 40 on a weekly chart. So this, my condition is fulfilled. High time frame, okay, below 40. Now I shift to daily chart to look for 5-star sell signals. Same lines. And how many shorting opportunities I get in there is 1, 2, 3, 4. And if you look at in price terms, 1, 2, 3, 4. That's 60 resistance. Your higher is below 40 only. So that's bearish. Any doubts? So that's my best shorting area. My stop loss is what? If it manages to close above 60. Then second, see the price where it has gone from here, this decline. Then second short, where will I exit? On this 40 support. Because on daily says no more bearish. So I exit here, somewhere here. Okay, then again short with 60 here, and that goes from here to here. Then again I cover here 40 support, again 60 resistance. Remember throughout this, weekly is below 40. So I am shorting the stock. First trade was mine at somewhere around 900 and the fourth trade was somewhere around 450. I am still shorting. So thumb rule is you have to short the weak stocks and buy the strong stocks, and not the reverse. You get that? Thumb rule about stock market or trading is buy the strong stocks, sell the weak stocks. On this day, RSI touches 57. Okay, and with minimum confirmation, something like a candlestick or a lower low or a simple trend line, something like this also you can draw this. This would confirm a short minimum. I would just short on the first candle only because I am too much convinced about it. But if you take your trend line like this and then short, that would be a short, and the stop loss is above the high. And then if your weekly is already below 40, it's going to pull it down. Higher time frame rules. So weekly will pull it down. Right? Any doubts? These are the 4 or 5. In fact, this is not the only shorts. I said 5-star is to short when it is 60. In fact, you can even short when it takes resistance at 40. That means your higher time frame is below 40 and lower also takes resistance at 40. That's extremely bearish. Only thing you have to be convinced to short something which is already going down. Right? So I had almost like 6 opportunities to short. One, the 4 which are marked. One more is here. One more is here. And one more is here. Right? So you make your objectives clear. So how I trade discretionary apart from trend following is every Saturday, Sunday we look at 150 stocks of derivatives. Okay? And then look at the RSIs weekly.